In this discussion, a bunch of Path investors and myself just talk about our current bullishness and whether or not it's changed with recent technology like Claude Code just and OpenClaw just like kind of taking over. So if you're interested in just a couple hours of like real fundamental and some technical discussion on UiPath stock, then sit back, relax, and enjoy.
All right. So to start us off, just so that everyone understands why we're seeing this price action in UiPath today, I think it's kind of twofold. For one, because Path had a later earnings report, it created a bit of an excitement cycle that I think caused UiPath to kind of recover off the bottom quite a bit more than some other kind of sub $10 billion software companies, even some bigger ones like almost 20 billion, like Team Atlassian. But I'm thinking like, yeah, Atlassian, Monday. These stocks didn't have seen absolutely no recovery off the bottom at all, um, except that Path did. So I was kind of not surprised to see a bit of a retest here, uh, back in line with the rest of its software as a service brethren. Um, so I think that's the first reason. But then the second reason, and this is like the really big one. Um, and guys, the technical stuff, it really doesn't matter. It's just like that's just part of owning stocks, right? You just have to live with it. Um, if you're a long-term investor, right? If you're buying stocks for the next 3 years, 5 years, not for the next 3 days or 3 weeks, then the technical stuff doesn't matter, and that's just going to be part of it. But on more of like a fundamental news basis, we had another announcement from Anthropic today, um, and I don't even know how much of it was new. I guess the fact that it can use your actual computer, because Cowork could already spin up a Linux, its own Linux computer, and it could already do everything on a computer, on its own Linux, on a virtual computer. So now the fact that it can use your computer, I don't know, it doesn't really feel like any actual news today, but it caused all of SaaS to sell off. Like I think the whole SaaS index is down like 4% today or something. Um, Montana and Phantom, if you guys want to become speakers, I would love to chat with you guys. I want this to be more of a chat, more of a conversation, less of a rant. Hopefully, during most of this. Yeah, so Anthropic is just scaring everyone. I mean, technology is just moving really fast, and that's scaring everyone. And the way that I think about it is because the speed of change has accelerated, it has made uncertainty greater. It has made the realm, the range of possible outcomes greater. Um, and if you're young and ambitious and excited about the future and optimistic, like that makes you quite excited to buy these software companies that are going to be doing work instead of helping manage work, or as well as helping manage work, or an automation company that's now 10 times better at automation. Like the bigger upside range excites you. But if you're 60, 70, I mean, probably even just, in the later half of your years, the bigger uncertainty scares you more than it excites you, because just like the rapid speed of change means that there's now way more upside, it means that there could potentially be more downside, right? Because the world is changing so fast, so you don't know exactly what the future is going to hold. So that increases fear, if you're trying to protect wealth more than you're trying to make money, um, or if you're not as connected to how fast stuff is changing, if you're not actually using Claude Code and stuff like that, and you're hearing people talk about, OpenClaw and Claude Code, and you don't really, it's like this big scary boogeyman that you don't actually know on a personal basis. So it can be your biggest fear, right? If you don't know exactly what it is, and you don't know exactly how it affects the businesses that you're invested in. So the speed of change, kind of ironically, the fact that there's now more upside means that there's also more fear, because the speed of change also means that there's more downside. So that's kind of the world that we're in, which is just so interesting. Um, Yeah, I don't know if you guys have any questions. So I've been thinking a little bit about like whether or not it's worth spreading out, like maybe I'm not sure what the correct percentages are or something. I still by far feel the most bullish in UiPath over the next 3 to 5 years. I think they're gonna find a way. They already have the data, the knowledge expertise, and how these enterprise automations work, right? They've already been automating enterprise scale workflows with robotic process automation before AI came on the scene. So that just gives them a level of understanding of how complex it really is and what really needs to get done, what level of governance, what level of auditability, what level of like security leveling and that sort of thing you actually need for an automation to really work in an enterprise. And I think that they're innovating as fast as anyone, if not faster than most. With Daniel Dines, I think kind of the most focused I've ever seen him. Um, so those two things together, already having the expertise, already knowing how to run automations inside of Fortune 100 enterprises and how complex it really is. And then having the founder CEO innovating as quickly as anyone, and also just having so much ability to pivot and change right now with no debt, 1.4 billion in cash, projected to put off like I think over 420 million of free cash flow this year. You just have so much freedom, to do whatever you need to in order to make it work and to stay one of the main players in automation. So I think Daniel Dines is going to do whatever he has to. So even though I don't know exactly what the future looks like, everything that Daniel Dines says makes sense according to the way that the industry is moving, and kind of also aligns with like what the really successful people are saying as well, like Alex Karp. Like Alex Karp and Daniel Dines have not said one thing that disagree with each other across so many hours of interviews I've listened to from both of them. So they're looking at this the same way. But yeah, a lot of people just aren't going to like the extra risk. I mean, the level of new competitors that are entering the automation space, um, it could be unprecedented in all of history. At the same time, the size of this market, how big actually doing work by harnessing artificial intelligence, the size of that market is going to be bigger than any market we've ever seen in history as well. So it makes sense that there's a ton of people jumping in. Phantom, I see you made yourself a speaker. I would love to chat. How you doing?
Hey, Jake, doing well. Yeah, thanks for putting the space together and thanks for giving me a chance to speak.
For
Um,
sure.
yeah, for those might recognize my name. I definitely have been a UiPath bull for quite some time. And I still am. I know there's recently been a lot of sentiment change with Anthropic, and I think there's some folks starting to get nervous. So kind of my thoughts on it all are, you covered a couple of them already. You look at how Daniel Dines is really the vision he's had, starting in really 2024 when he started to make this pivot, moving the company to be agentic, to think about it in terms of orchestrating all of these agents that are that are that he predicted would be popping up, and now we're in that environment where these agents are popping up, and I think that is really where the demand is ultimately going to come from. And I think it's while that all unfolds, the question becomes, is there going to be another solution that doesn't require orchestration? And I think that's where that's kind of what I'm sitting here and I'm watching, right? So if you look at Claude and how that's recently popped up, and it seems very powerful. My whole thing is, as long as Claude continues to be a part of the ecosystem, then there's really not much that I'm concerned about. I think there's if you imagine a world where you have just really powerful individual agents that kind of do everything, that and you don't need orchestration, like, yeah, that would be a concern for the bull case, but I don't really see that happening. And I think that's really the only scenario that would make, the UiPath story and the Maestro demand not really happen. And I think because things have been moving so fast, you just assume, oh, this pace of innovation is going to continue to the point where these agents are just kind of off on their own, doing their own thing without needing this top level of enterprise guardrails and enterprise um, business rules and audit trails. And I'm not seeing that being a realistic scenario. But I think that's kind of where people's minds are going, because they just see these new technologies popping up. But really, this is what Daniel Dines has been kind of saying all along. And I think now that it's happening, Claude is getting it's become a lot more of a household name, than UiPath has. And I think that's just part of the nature of the business. And really, UiPath is more of a behind the scenes kind of support to make this all happen. Whereas Anthropic is, more in the hands of a lot of everyday people. So I'm kind of looking forward to this phase passing, and hopefully, the thesis is that in order for all these agents to really make an impact in a large business, I mean, you need rules, you need audit trails, you need really a purpose and a way for all this to work together without just letting them run wild. And that still seems intact. And I think as that becomes more clear, the demand for UiPath will become more clear, I think, to the market.
Yeah, I think you're totally right. I think people are jumping far too ahead of where the technology actually is. It's like the fact that someone else can do something doesn't make everyone who's currently doing stuff in your business, like, doesn't make them worthless. Like they're actually doing it. So the fact that Claude can click things on your computer does not make UiPath's current RPA bots that are currently automating and providing hundreds of millions of dollars of savings inside their current customers. It doesn't make those processes worthless. It doesn't make them worth ripping out. And then talking about what you were discussing, I had a few points. One about no orchestration, the potential of that, and then another. I just wanted to talk about Claude Code a little bit. But I think that the chance that there's no orchestration, I mean, it's pretty much none. I mean, every single smart system that exists, just from a fundamental basis, I don't care if you're thinking about a human being or an animal or a government, a community, every single system that has any sort of intelligence and any sort of vision or purpose has some amount of orchestration in it. It's a requirement. You can't have a smart system without orchestrating many different parts. And then people are also just like, I think, overgeneralizing what it means to have intelligence, because not all intelligence is created equal, and the best intelligence doesn't make every lower intelligence completely worthless. You still, even if your business has PhDs in it, the PhDs are oftentimes a lot more expensive than the high school intern, and you have work to do in your business that you don't want to pay the PhD salary to do, right? You want the intern to do some of the paper pushing and stuff. Now, obviously, we're talking about the future. There's probably going to be a lot less paper pushing, and AI is going to be able to do a lot of that. But just like the fundamental point, if you're just thinking about this like top down from a theoretical level, the fact that there's higher intelligence does not make lower intelligence useless. It just causes lower intelligence to have to charge less. So if you think about this now, bringing it back to business orchestration, what that means is like the AI is going to keep getting smarter, no doubt. And there likely will be an AI intelligence in the future that's smart enough that it could do your entire job if you just laid out like all the rules in your business. It could do it to some extent without an orchestrator. I think AI will get smart enough, but you have to think about the cost of this. Like, the most intelligent AI systems are going to be the most expensive per token. Every second of thought from these systems is going to be the most expensive. So you're just like a PhD in your business, you're going to want to put them only on the most difficult tasks, the tasks that actually require like that level of intelligence, because it's expensive to wield that higher level of intelligence. For small repetitive things, you're going to want the cheapest solution for that. So you're really going to want AI and RPA in your system, because RPA is so much cheaper, and RPA just stands for robotic process automation. It's the repetitive tasks that are done the same way every time, and they essentially become tools. They become little fingers or arms for the AI brain. And what it's going to do is what it's going to mean is that UiPath's system is going to be far more cost effective than wielding OpenClaw, where the highest intelligence is doing every task every time, and it has to kind of like rethink through processes that it's done before and like use a bunch of tokens for them when they're quite simple. So people are just like oversimplifying what automation even means, and they're missing the complexity of it all, and the cost of it all, and how companies are actually going to think about deploying it. And the chance that orchestration actually goes away is none if you look at nature. And then if you think about cost, because you're going to want to wield cheaper intelligences, you're going to want higher intelligences orchestrating it, or rules orchestrating those lower level intelligences. And then talking about Claude, so I think people really miss. I tweeted out today that in in a recent interview that came out a few days ago with Daniel Dines, I just watched today for the first time. He talked about this in the earnings call as well, how they're making UiPath usable by coding agents. And I think people underestimate don't actually understand what that means. So I've been building a stock researching app with Claude Code the last few months, and really have been getting into it a lot the past few weeks, which is why I haven't been tweeting with as much velocity as I previously did. And Claude Code can interact with your host, with your database, with your authenticator, with your payment solution. So with Stripe, with Vercel, with GitHub, with Supabase for authentication. And your AI agent, your coding agent, literally, like you sign up for your subscription, and then the coding agent can do everything. Right? Like it can do all of the interaction on those apps for you, so that you never have to go to those apps again. You never have to go to those web pages again. However, Claude Code signed me up for a ton of subscriptions I didn't have previously. Like Claude Code signed me up to multiple different market APIs. Claude Code signed me up to Stripe. Claude Code signed me up to Vercel. Claude Code signed me up to GitHub. Claude Code signed me up to Supabase or whatever that one is called. And I have all of these subscriptions I didn't have previously. So instead of Claude Code eating all other software, Claude Code actually created revenue that a bunch of other software companies never would have had if I wasn't able to code with an AI agent. So what Daniel Dines is saying is that UiPath, it's going to become another one of those systems like Stripe, like Vercel, where your Claude Code agent, when you tell it, hey, build me an automation, it can say, hey, I can, if you want this to run like at enterprise scale with governance and stuff, I can build your automation on UiPath for you. And it will literally interact with UiPath on the back end, and it will do the process mining. It will build your RPA robots. It will build your AI agents, and then it will build your Maestro orchestrations. All of that will be possible for your Claude Code agent. I think people are completely misunderstanding or just like not grasping what Daniel Dines is saying by UiPath's entire platform changing its whole focus from being used by humans to being used by coding agents. And in this interview, he said, like, it will take cost time to deployment, which is like time to value, from months or weeks to hours. And like what that will mean for the deal flow and for like an average everyday person to potentially even use UiPath. And guess what? Sometimes when you're using Claude Code, you know so little about what Claude Code is doing that it makes decisions for the human that the human doesn't even really know they're making. Like very fundamental structural decisions about how the app is made and what the architecture is going to be. Claude Code will just like make those decisions for a human if they don't specify it, if they don't know enough about it. So if they execute on this well enough, like I don't know what the future holds, but it's possible where there's a future where you literally have people building automations on UiPath through Claude Code that aren't even really knowing that they're choosing UiPath. They just maybe told the agent that they needed it to be secure or something. So Claude Code just decided to like build within Maestro, or something like that. Now this is just speculation here. Obviously, this last part is just speculation. But this is a CEO that knows what's going on, right? He's on the cutting edge and he's pivoting quickly, and they're releasing products fast. So the chance that they become obsolete, I think, is pretty much none. Yet that seems to be the main narrative that's being priced in right now, which is why I still think there's like a ton of opportunity here, and at least a 10x is more likely than a dud. I don't know, Phantom, did you have any thoughts listening to that rant?
Yeah, I think the entry point, the current valuation, is also super important to keep in mind. If we were talking about, because I mean, like any investment, there is an unknown, right? I mean, anything that you invest in, you really can't guarantee what is going to happen. There is a level of calculated risk. There is, risk reward profile. And I think if we were having these conversations and, UiPath was priced basically anywhere between here and look at Palantir's, multiple, obviously, very different companies on current, different, revenue growth trajectories. I know Palantir's had a ton of growth recently, but point is, like you said, it's not priced for UiPath being a major growth player. And I think there's a definite path for them to be. And if they are, which it seems that, Daniel Dines has been preparing for this exact reality that we're in for the past couple years. So I'm willing to make that bet. And, if we were having this conversation and UiPath was trading at a 30 times revenue multiple or something already, then I could see where one Claude headline that scares people is gonna cut the stock in half, or something. But at this point, I'm just not seeing it, and I really do feel like a lot, like the negativity is priced in, and the optimism clearly isn't. And there's definitely people out there that I think are seeing it the way we do, but there's a lot of people that don't. And when that matters, I mean, I think if the stock were priced differently, I would probably have some different concerns about maybe what the risk looked like and what the downside looks like. But at this point, I'm still very much willing to bet that, if you just think about a world where agents are being created, every day, and we really don't know how the whole landscape's going to play out. But you have the opportunity to invest in a company that's clearly positioning themselves to do everything they can to be a leader in the enterprise adoption of agents, and making themselves a major part of how that gets deployed. That it just seems like it's the right place to be for me, to just make sure my portfolio has some exposure to that, right, to the unknown. I think that's where the upside, can definitely be, and that's where I want exposure to. So yeah, that's kind of my thoughts on that.
Yeah, no, I think that's a really good point about present valuation being a little bit of the filter with which we're kind of looking through this opportunity. Um, I mean, based off of my calculations, the enterprise value to look through earnings is trading like 6 times, which is crazy. If you just do price to earnings, it's like 9 times, under 10 times, um, which is an extremely low price to pay, even for a company that was only going to average 10% growth or 9% growth. I mean, Peter Lynch says that you should look for a stock like a stock is undervalued if it's trading for a lower price to earnings ratio than its sustainable growth rate. Now this is look through earnings, so I'm applying what I think a mature profit margin would be on trailing revenue. Um, but we're in a market that's like really, it's not thinking about valuation in any of these sorts of ways, because right now the market believes that we're going to see pricing compression because of Claude, even though you know AI is notoriously quite expensive. Like you can spend hundreds of thousands of dollars running OpenClaw continuously per year. Like it's more expensive than a human employee right now to run it continuously per year. So people are seeing this stuff from Claude that's super expensive and saying it's going to lead to pricing compression, and like that, like margin compression seems to be the base case for Path and all software stocks. And at the same time, last earnings, the company themselves raised their operating margin target from 20% to 30%. Um, and it's like, okay, we're living in a backwards world where the base case from the market is the opposite of what we're seeing guided from the company, but that's fine. And what the base case from the market is like doesn't really make that much sense when you think through it fully. But then the other thing that you mentioned, it triggered something that I meant to say last time but forgot, regarding the need for orchestration. You're seeing every single software company launch agents. Like obviously Salesforce with Agent Force is a really big thing. ServiceNow agents, Google agents, Microsoft agents. You're seeing Monday.com recently said that they are changing like the whole goal of their company from managing work to doing work. So they're launching Monday agents. And people view all of this as competition against UiPath, but I don't. I view it as all increasing the need for orchestration, where you can orchestrate all of your agents across all of your different software. And I think that there's a perception right now that everyone is becoming a new UiPath competitor, when in reality, all of these software companies are making agents to only automate stuff on their software. That's it. Salesforce is not spending the time to make their agents automate stuff on ServiceNow, right? Like they're not gonna help ServiceNow become more agentic. They're totally focused on making their agents work the best way possible on their own platform. And this is the case for every single one of these software platforms. They're making agents for their own platform. That's it. What UiPath is doing is much harder and far more useful. It is orchestrating all of these agents that now exist on every single platform so that you have one end-to-end workflow of the entire job, so that the whole thing can be automated across every platform, and you're not having humans having to interact with the agent on each platform individually. um, and yeah, when I'm seeing all of this happen, it's like it's not making me more afraid for UiPath. It's making me more excited for them and the need for agent orchestration. So yeah, when you take the valuation and you combine it with the growing need for agent orchestration as every single app launches their own agents, I just think that the asymmetricality of this opportunity, it's so asymmetrical, um, and that is not changing. And just like even just like the current free cash flow yield, if you get no growth, it's like you're gonna do well. You're gonna get your 6-7% a year, um, and they're gonna keep having growth. The only question is, does that growth accelerate to 20% plus, like I think, or does it slowly decelerate to 5-6% growth, like the market seems to think? But the nice thing is that deceleration's already priced in. So if that does happen, there's no downside, and you just get your yield and you get your returns as an owner. Um,
Yeah.
yeah.
The other thing I like to think about that kind of gives me, it just helps me get more comfortable with where the future's heading is, you know, people seem to think that Anthropic and UiPath are somehow competing with each other, and that's just not the case. Really, UiPath is the enabler of a lot of these LLMs to get their tokens into the production of large enterprises, right? So if you think about just how massive the LLM use case goes, I mean, it's going to be spanning not just enterprise use. There's obviously consumer use, there's small business use, there's educational use, there's all this stuff. Well, UiPath is really just carving out and focusing on large corporations, right? And specializing in how do you integrate LLM use, across an enterprise, across the various different agents that are going to need to be there, whether those are created by UiPath, or an outside vendor. But either way, the LLMs that are powering these are making money, right? So anytime Maestro is calling a Claude agent to do anything, Anthropic's making money. So this is not a zero sum winner takes all. Like there really is a matter of, as this whole market grows, I think there's just a lot more opportunity for, if you're in this space and you're carving out a niche that's going to be needed, that market will continue to grow. And I don't really see anyone else going this aggressively after enterprises. Claude is a much broader, use. I mean, there are people using Claude at home, right? There are people there. Those tokens are getting used across many different areas. And UiPath is saying, we are going to create the best environment for enterprises to leverage LLMs. And that's not a threat to Anthropic. If anything, they appreciate that. Their partners allowing Claude tokens to get used across enterprises, along with OpenAI tokens and Gemini tokens and however else people want to make their orchestrations. But that's also a key thing. Like, yeah, if UiPath and Anthropic were going head to head and it was winner takes all and one's going to die, one's going to survive, then sure, these would be like, you could start to panic, but that's not what's happening.
Yeah, I think that's a really good point. Also, I want to open it up. If anyone has questions, we would love to answer questions that you guys have. Trust me, none of the questions are too dumb, because if you have a question about how this works, and this is like a pretty complicated and fast moving space, chances are someone else probably has a similar question to you. So don't feel embarrassed to ask any questions. I think it's like really valuable, honestly, that if there's things that you're getting caught up on, that we talk about them, because they could help me as well. Like they could help both of us see something that maybe we haven't thought about. So yeah, if anyone has any questions, I would love to answer questions, and I think Phantom would as well. But yeah, I think those are all good points. UiPath and Anthropic are not competitors. In many ways, they are like the strongest of partners. In a similar way that UiPath is one of the strongest partners of Microsoft, and it's Microsoft's preferred automation provider. But I think people are like underestimating. Like, yes, they like these labs do have incredible talent. Like, don't get me wrong, they have incredible talent, but that doesn't mean that they're going to eat all of software. It's like they are in a tough fight. They're in a fight for their lives, not only against each other to stay the best model and continue to have the smartest model, which they have to put their smartest people on, making sure that they're continually researching, continually making breakthroughs, and continually having the best performing models against the other labs. But they're not only competing against the other labs, they are also competing against all of the open source players, because the open source stuff, you can download it and you can run it locally for pretty much free. And Kimi and DeepSeek, some of these Chinese models are not that far behind. Like maybe 6 months behind, maybe less. It honestly depends on the very moment that you're asking. But that means that OpenAI and Anthropic and Gemini and XAI, it's like, yes, they are going to put resources on perhaps making some of the software harnesses that they think are going to be the most lucrative and biggest use cases of their LLMs. So they probably are going to all try some level of business orchestration, but they cannot entirely focus on that as their sole thing. Like, this is all that matters, is being the best orchestrator, the best governance layer, the best audit layer, the best training layer for enterprise scale end-to-end workflow orchestrations that don't only use AI agents, but also use robotic process automation and any other tool that arises in the future to automate stuff. It's like every single UiPath engineer and the CEO is only focused on that one thing. And this idea, this fantasy that Anthropic is just going to do every software service that every software provider has to make their models more useful themselves, and it's just crazy. It's just crazy. Like, there's a lot of brilliant people in the world, and these people are going to find ways to leverage and to build harnesses for these AI models to make them do things that blow away the labs themselves. And I think that's definitely the truth. Chris or Brian, do you guys have questions or comments that you want to make? I would love to have you up here. I think Brian is a very level-headed analyst of these stocks. I tend to get super deep in the weeds, and then people view me as very fanatical because my views can diverge so far from the present narrative. But yeah, I think Brian's a good analyst of where value is.
Yeah, thanks, Jake. Yeah, so I mean, UiPath right now, I mean, it's part of the SaaS sell-off. I don't think it's anything specific to UiPath. It's just the market kind of selling everything off and then asking these businesses to, show us what you can do and prove us wrong or not. And it'll be up to the businesses to kind of prove them wrong, or for Wall Street to decide that they were wrong and get back in. I guess for Path, I was disappointed with the guide. I felt like the guidance would come in better than it did. I have looked at other SaaS businesses, including ones I'm invested in, that gave guidance for this year, and they all came in, a little bit lower, and some of them revealed that they were intentionally basically sandbagging by saying that, all right, we're just guiding what we're like 100% sure is being committed by enterprise businesses. And if we do better than that, we actually think we might, but we're just not comfortable guiding for it because we don't know exactly what those numbers will be. I don't know if that's the case for Path, but it seems like a theme that maybe enterprises aren't showing all of their cards right now for how they're going to spend their money for the rest of the year in the kind of SaaS space. So, there's a lot of tools and things, and, they got to go through their budget and figure out where they want to spend money this year. And even those enterprises may not know for the second half of the year how they're going to spend all their money. So I think that's part of what's going on with guidance, that there is potential for them to be guidance. And I think it's probably a little bit sandbagged, at least.
Yeah, well, they guided for 6.7% growth for last year, and then they did 13%. So guiding for 9% growth for this year is actually a pretty big increase in guidance year over year.
Right. And they also had strong ARR, which is another theme I'm seeing with other businesses that serve enterprise space. There are quite a few businesses that have strong ARR and did guide low. So, when they have strong, a strong ARR, you kind of expect, okay, the next year they have momentum on their side, right? Now, maybe you don't sign all your deals in Q1 because that's kind of the beginning of the year, and you sign more in Q4. But that's still, some acceleration and worth noting. I guess the reason I'm personally not invested in Path right now is because I don't know what I personally, it could be the lack of my own research, or just, the average investor not knowing. I don't know how good Maestro is going to be for product market fit versus competitors for the overall market. I think it's a good fit for their current customer base, and I think Wall Street could kind of underestimate them there, because there's a lot of chance for them to increase their revenue with those clients with Maestro. But I just don't know how to gauge that. I don't know how to figure out how much legacy businesses in particular are going to be using Maestro. There has been good commentary on the earnings calls that, it's seeing use, it's saving money. It's still early. I just don't know what the speed of adoption looks like there. So it's kind of, I'm just kind of watching Maestro, seeing how it develops. Um, but right now, it's not priced like a lot of the SaaS stocks. It's not priced at any kind of premium. So right now, UiPath and quite a few other stocks, if you feel strongly that they have the right products moving forward, a lot of discounts. So that's kind of my feeling. I don't know if that's helped anyone, but
No, I think I think those are all fair takes. And I think you're right. I think that we've seen proof that Maestro is a good fit for the current customers, and we've seen multiple customer interviews talking about how it's really increased the value of UiPath when they've added Maestro. But we haven't seen any new customer growth, right? At least not like overall. We've seen a lot of growth in customers over 1 million and customers over 100,000. I think they added a little over 400 customers over 100,000 in annual recurring revenue, and then they added a little over 40 customers over $1 million of annual recurring revenue. And in Q4, they actually added the most number of new customers over 1 million in ARR than they have in 2 years in a single quarter. So it was really great, like actual numbers, but then the guidance obviously disappointed a ton because they guided for a revenue number where if you look at their gross retention rate, not net, but just like for every dollar, not counting any new dollars, how many dollars come in again the next year, their gross retention rate's 97%. And they guided for a number where if they add no new revenue and see the 3% churn, they just barely beat their guide, which just seems like super, super conservative when they're also guiding for adding more net new ARR this year than they did last year on a like raw dollar amount. They're gonna, add more contract value this year than they did last year for the first time since 2021, and the first time since they've been a public company. Which I think I understand why people are disappointed with 9% growth, but it's like, when you're a really big ship, when you're a huge cruise ship, you don't change direction quickly. You do it very slowly because the momentum of these huge businesses, it takes time to really corral that energy around and bring it back towards reacceleration. So yeah, Phantom, you unmuted. Did you have something you wanted to say about?
Yeah, just as we think about, customer growth, I think focusing on, 100K or greater ARR or 1 million or greater ARR, it seems like those are the customers that, executive leadership is focusing on. That's what they're putting in the deck. That's what they're highlighting. And I think that just shows where their head is, right? They're not really viewing Maestro. When you talk about product market fit, I don't think they're viewing it as something a small business will necessarily need. I think Claude or others could probably, get that market share with a totally different looking onboarding process, right? Where you're basically self-deploying it. You maybe have an IT person, or you just, or a tech savvy person who's running the business. You go online, you kind of start using Claude in your small business or personal use. I think the product market fit with Maestro, it shows a lot. If you look at their partnership with Deloitte, for example, their partnership with SAP. They're going after the biggest companies all over the world, and that's where it does take some time, and that's where you really have to believe that they're kind of going after it the right way. Until I see a competitor that's going head to head in that space with a product that's, you know, as good or better, that's when I'm not concerned until I see that, because that's clearly the market they're going after, and their footprint is all over the world. They do have plans on expanding in the Middle East as well. I know that's, you know, obviously being put on hold with what's going on over there now, but I do think that, like, the larger customer base, the more complex, high volume workflows, that's where hopefully the product market fit will be, and that's where I think they see it too, which is why they're putting that kind of focus on those size customers.
Yeah, I think you're definitely spot on as far as where the current focus is. It's definitely on the big enterprises. However, I do think that the market as a whole is very much underestimating what it might mean for UiPath's ability to penetrate Maestro throughout the market when time to value drops to hours instead of weeks or months, and when a non-engineer can have Claude code build the entire UiPath automation, the RPA, the AI agents that are a part of it, the orchestration in Maestro, without being an engineer themselves, and how much of the market that could actually open up, and how much TAM expansion through self-serve that could create. It sounds crazy me talking about this, because this isn't even in the thought, like, this isn't even in the sphere of thoughts of the current market, that could be a possibility. I mean, the market is afraid, right, that they're not even going to be able to grow their current customers, like their current size and their current customers, let alone they might actually start expanding. That's just an insane thought right now, right? So yeah, I feel so comfortable being against the general consensus. Chris or Wealthmatica, you guys want to hop up? I would love to hear any thoughts or questions. Or if anyone else has any questions, I would repeat that if you have a question about UiPath or the space, that you're afraid to ask because you think it's dumb, like, it's probably not a dumb question. Like, the space is moving so fast, it's really hard to keep up with. So I would love to answer any questions people might have about UiPath. I think I can see if people request, but just in case, I'll make a few other people co-hosts. But yeah, I mean, at this very moment, when you're trading at this, when you have like a free cash flow yield of 7% or something already, and your profit margin's about to increase from 20% to 30% on an operating margin basis, your price, like, you're going to have no top line growth at all, and that's kind of where we are, and I think that's just, you know, extremely unlikely. I don't know, Brian. Did you have any other thoughts? I'm not getting any questions, but maybe you have some questions for me, Brian or Phantom. I have a question for you, Phantom. Have you used Claude Code at all, or have you not been using it yet?
I have dabbled in Claude Code. I haven't used like Cowork or any of the more like agentic stuff. But I've messed around with it a little bit, but not a ton. I really don't have a lot of use for it currently, or haven't been building anything.
Yeah. Okay, so I've been using it a ton. Like, I've been in Claude Code probably, I don't know, depending on the day, some days like 16 hours. But I've been working on building a stock researching website. And the number of things it just does not do well, people still underestimate. Like, first of all, people just underestimate how easy it is to make a nice looking interface, and how hard it is to actually make an app that works and has good security and authentication and like actual APIs hooked up that are giving you the right results, and the AI didn't make up the numbers that you're seeing. And like, so many decisions, like, the AI just does not think long term through stuff. Like, I can just give a few examples. It created our web pages, or the web pages that I made, to call APIs directly when someone visits the web page, which is going to destroy the API limits I have. Instead of creating a cache base where it only, where it draws from our cache, from our memory of every stock, and only refreshes if it hasn't been refreshed recently. So you can have 10,000 people visit a page and it doesn't crash your whole API or something. So it doesn't think about any of that. So you have to build it, and then when it starts breaking, you have to rebuild it again. And for me, I'm not a coder, so it's just decision after decision it makes so stupid, where if it gave me the options, I could be like, oh yeah, obviously do this other thing, or it just makes the bad decision, and how you're fundamentally building your app over and over again. And then you just have to keep rebuilding stuff after you finally realize it's a problem later on that it took a shortcut. So I think we're at a moment, yes, AI is going to keep getting better, but we're at a moment where human knowledge, taste, experience, the ability to actually learn over time and not be limited by a context window is so valuable, and people are just assuming humans are going to be counted out when they're not. So I just wanted to throw that out there. Humans are not losing our value anytime soon at all.
Yeah.
Our roles are going to change, but our value is not going away.
Yeah, and also, it's really complex to actually deploy. I mean, as you just mentioned, just even building something at home, you can definitely, people are going to run into roadblocks. You have to troubleshoot things. Imagine large corporations trying to deploy these things at scale. It's not something that is simple. There's a reason why it's not like you just go on and, large companies aren't just building Maestro workflows kind of overnight. These are long processes, and actually some of the research I've done opened my eyes into the network of vendors that are out there. I don't even know if everyone realizes this, but they're called value add retailers, and there's basically private consulting companies out there. Deloitte is obviously a huge, mega firm that has a partnership now with UiPath, but there are a lot of them around the world that are basically getting certified in Maestro, getting really good with the products to then help get this stuff integrated into companies as well. And that's kind of, I think, will hopefully create a sticky ecosystem there too. I mean, there's a whole and this is where I haven't used the products myself, but I've just done as much research as I can without getting my hands dirty and using it. I mean, there are configurations that are out there. There are app stores and different things within UiPath that are there to make these deployments, able to be scaled. And there are these vertically integrated solutions now where they're turnkey solutions. So if you're in financial services and you want to start using UiPath to help decision your loan applications. Let's say you're a bank, let's say you are you're a local community bank and you have loan applications coming in and you want a way to automate that. There are turnkey solutions. They still need to be tailored to your specific business, but it cuts out 70% of the initial legwork of figuring out, okay, this is the connector needed to connect this to this and all that. So this is a process that I think is taking a little bit of time to reach that critical mass. And that's why I also think some of the initial sales growth might not be as fast as people might expect, or when they look at N8N, for example, a consumer product, they're like, oh, well, that's orchestration too, or that's using connectors. It's yeah, but the reason why that ramps up overnight, or it can, is people are just onboarding that at home and they're just using it, and they're just using it for kind of simple orchestrations at home. So there's very low barrier to entry to even onboard it. Well, the pro and con of kind of UiPath's go-to-market strategy is there is a high barrier to entry, but they have ways to break through those barriers. And it takes time to kind of put these new orchestrations out there. But once they're out there, they're sticky. And I think for a competitor to win that business from them is going to be difficult. And it's the same reason why they're taking a little bit of time to ramp up. I mean, a competitor is going to have to figure all this out, build all this out, have, you know, a network of vendors, and it doesn't happen overnight. So something to keep in mind too. They're going after big businesses. It takes time, but it's a moat in itself.
Yeah, for sure. I think people do underestimate that. Like, yes, it takes time for UiPath to ramp a Maestro, but it's going to take even longer for a startup to ranch an orchestration software when they don't have half a decade or a decade actually like automating processes inside of enterprises and seeing how complex it is and building up all of the governance frameworks and auditability frameworks and all of that. It's like they're going to be even slower than UiPath likely when UiPath is moving as fast as they possibly can. Brian, I have a question for you, because I've seen like no one talk about this at all except for me maybe and Phantom. But there was a lot of commentary from Daniel Dines about automation backlogs in customers. And I haven't seen anyone talk about this growing backlog commentary at all. It's like the market, it doesn't align with the current market narrative, so it just hasn't been discussed. It's like it's been completely ignored. It also doesn't align with the guidance, to be completely fair. So people have just kind of marked it off as like not being real or something. Yeah, I don't know if you have any comments on that, Brian, as a non-owner, or if he doesn't jump in, you can, Phantom.
Yeah, what I see for all of SaaS right now is the market wants businesses to show them, and even though basically many of these Constellation software, UiPath, I'm invested in GitLab, across the board, the market wants to see the numbers come in. And a lot of retail investors, myself included, expect numbers to come in for many of these businesses better, in the future, next year and the year after, and things to keep ramping up. UiPath in particular has very sticky products with enterprise customers. I think it's obvious to probably everyone listening here who's spent time researching Path that, these are customers primarily that need auditability, governance. They need guardrails. That's why they use UiPath. There's 0% chance they're going to go up with some, vibe coded startup that's going to do who knows what with their infrastructure when they plug it in. So it's just a matter of them having to show that there is future growth. It's not, I don't think UiPath has any chance where it's going to be eroded anytime soon. I don't know what happens 10 years from now, but I can see maybe the next 3 years into the future at most for most businesses. And 3 years into the future, I don't see any of their enterprise customers really churning to anybody else. So that leaves the question is this a great investing case? It just comes down to future growth, not to the SaaS sell-off of everything's going to be vibe coded competition, but is Maestro going to increase the RPA customers' usage? Are the legacy customers going to adopt that? Are new customers going to adopt it who want a reputable business? So yeah, I mean that's kind of my take. And Daniel Dines, he's bullish. He says there's all kinds of implementations that they have a backlog for. Other businesses say they have a lot of stuff too that has a use that's going to increase in the future. But at the end of the day, Wall Street isn't ready to jump in yet. So I guess we'll see what happens. I think by the end of the year, maybe we'll have better answers as the guidance for this year, we find out how much all these businesses beat them and how they guide for next year. And then, that proves Wall Street wrong. Then maybe all these stocks will be back up to where they were last year or even higher.
Yeah, I think that's a fair take, Brian. And I mean, just to be completely candid with everyone, either the guidance is super sandbagged, or Daniel Dine saying, I think the exact quote was something like, in almost every customer conversation I'm having, they're saying that automation backlog is growing and that this stuff is approved by the C-suite, the ROI is approved, and they just don't have the time or the engineering talent to actually build it all. If that's true, then they're going to beat and raise 3 quarters in a row. So just being very candid, if they were to miss Q1 guidance and lower expectations, I'm going to be out, because then that means that what Daniel Dunn said is just not true. However, I am taking what he's saying to the bank. I mean, in many ways, at least with my own portfolio and my own positioning, because he's a historic sandbagger. He, like, before their growth slowed down a lot, they weren't saying, "Oh yeah, we're going to be accelerating." Like, you go back and listen to the earnings call where he takes over from the other CEO that they hired, who kind of messed up the business a bit, and he's like, "Our execution is bad. We made a lot of changes that are hurting our sales. The growth deceleration is going to continue. We expect it to keep getting worse all year." Like, he was very candid. This is not someone who pretends it's all good when it's not. So then last year, when they come in and guide for 6.7% growth, 6.7 to 7% growth, and then hit 13%, almost doubling what they guided for at the beginning of the year. And then they come in and their guide is 9% when they're saying there's a growing backlog. Almost every customer conversation is the exact quote. It has people are telling him there's a growing backlog. It's like, okay, yeah, he's a historic sandbagger. So I don't think it's exactly the same when Daniel Dine says that there's a growing backlog as a lot of these other companies. But at the same time, I think that probably most of these software stocks are way oversold. Like, Atlassian should not be trading 3 times sales with 85% gross margins. And I think they grew their remaining performance obligations by 40% year over year in Q4. Like, when you're growing your backlog 40%, like, you're probably not at least short-term at risk. And that's like way faster than the revenue growth. I mean, even UiPath grew remaining performance obligations 19% in Q4, and they're guiding for less than half of that in revenue growth for this year.
Jake,
So,
I would be extremely shocked if Path missed their guide this year and did worse. My expectation is they'll beat it at least some. I just don't know how much they'll beat it by.
yeah, for sure. Phantom, how come you think no one is talking about how UiPath says there's growing backlog, or any of these like software companies? What do you think the reasoning for this is?
Yeah, I remember hearing that too. Daniel Dines mentioned that. I'm not sure. I think it kind of seems like the possibilities of what can be automated. It seems like the C-suite is almost just now realizing it. And there probably is this fear of we're getting left behind. And so, or we don't want to be left behind. We want to make sure that we're staying up to date with this technology. So there's probably, like, over the past 6 months, I wouldn't be surprised if across a lot of these companies, there's just been, more conversations between CEOs and CTOs saying, okay, what can we do? But so they want to do it. But that's also fairly recent. I don't think all these companies were looking for these solutions or even, thought they were possible maybe a year or 2 ago. So there's probably this, like, transition period where companies are kind of nervous that they're not doing enough, and they're putting in all these initiatives, but then, yeah, you can't get it all done quick enough. So that's perhaps why the backlog's growing.
Yeah, I feel like the the probability, because if you look at what happened with Palantir, they increased their time to value. They were able to accelerate it a ton after they first launched AIP on top of Foundry, which I kind of view as launching Maestro on top of UiPath Studio. It's not exactly the same, but the analogy holds true a lot deeper than I think a lot of people would realize. It wasn't until Palantir started really increasing time to value that we saw the revenue growth accelerate a ton, because companies could adopt it and start getting results in that quarter, which is what most enterprise managers manage for, is the next quarter. They kind of they look at a little bit further, but they do care about the next quarter a lot. So they're a lot more likely to adopt something if it's going to help them, beat the next quarter. So when Palantir got the time to value down, the revenue growth really started accelerating. So I think that if Daniel Dines is telling the truth when he says that engineering agents and coding agents being able to use the whole UiPath platform is going to accelerate time to value from weeks or months, which means you adopt it now and it doesn't hit this quarter, the savings don't hit this quarter by the time you run your pilots and everything, to hours, and it really can help you now. We could. I think there's like a 50% chance we see a Palantir like revenue growth acceleration this year or next year. And I just think that when that happens, like, this could be a 10x stock in like 12 months, and the sentiment can change so fast. And I don't think that anyone is thinking that way. I don't think anyone is, even the most bullish people. I mean, I think Phantom is probably the most bullish person I see posting on all of X besides me. And neither of us post that way. So when sentiment changes, it could be crazy.
Yeah, that is definitely true. I did post something a while back just comparing Palantir, really price to sales multiple versus UiPaths, and I don't know where Palantir is today, but
Hi.
and we're getting some feedback. I don't know where Palantir is today, but I know they peaked at like 120 price to sales. Last, I checked, I think we're at maybe 80 or 90 currently in sales. That happened very fast as that sentiment changed. And I'm not saying UiPath's going to get, anywhere near that anytime soon, but when they're sitting at 4 times trailing sales, and I mean, no one really talks about their enterprise value, but their enterprise value is also insanely cheap. Given that they're sitting at, I think, almost $2 billion in cash right now.
Yeah, 1.49 billion, I think. So pretty much 1.5 billion in cash and no debt. And much of the liability side is remaining performance obligations, which isn't real liability because they have 85% gross margins. So just keep that in mind as well.
Right. And that's where it's just, I feel very comfortable holding, even though there is unknown, right? We don't know exactly how enterprise adoption is going to unfold, but you have a company that's doing everything they possibly can to position themselves to be the leader in enterprise adoption of agentic orchestration. The stock's not priced that way. It's like, I'll just sit and I'll just wait. I'll just wait it out. I mean, until I think Brian, you said it yourself, you don't really see a lot of downside risk in the short term in terms of, missing guidance. Guidance is not aggressive. Their current multiple is not aggressive. So as long as you're not in a rush and you're not looking for tomorrow it to be, a double or a triple or whatever. I mean, I think if you're giving yourself a little bit of a longer window, I'm pretty much giving myself at least the rest of this year, because I think Q4, and I'm just talking calendar Q4 now, just is when you're going to start to see a lot of these. I think you're going to start to see things pick up with what's in the works today. These new coding agents also, like, I think Daniel Dines mentioned within the next couple months, they were gonna really do like a grand, launch of that. And he said that during the earnings call. So that could be, a month or so away from now. So I think they go live with those coding agents and, should speed up time to value. And then you kind of let that play out. Second half of this year is probably where we start to see some of that revenue, acceleration.
Yeah, for sure. And like before coding agents, right? Like they were obviously doing other things to accelerate time to value as well. Before, I think AI kind of just really flipped another switch with Claude Code and its abilities. And they're really like, okay, we need to make this a coding agent first platform instead of a human first platform. Before that switch really happened, they were already doing other things to accelerate time to value. Namely, they're creating specific kind of pre-built automation use cases for traditional highly regulated industries like healthcare and insurance, and also some security stuff as well, where they have now built from the ground up, from scratch, enough of these Maestro orchestrations that, like, if you guys should do this, by the way, you can log into UiPath, create a community account, it's completely free, and you can load up some of the templates that now exist for claims handling, for insurance, and and it's very complex, cool stuff that even includes after you're verifying that like it's a legitimate claim, it even includes stuff like reaching out to you and to reinsurance in the automation orchestration. So that if you have reinsurance, like it's already pre-built for that. So they're creating these pre-built solutions, and they're actually going to be announcing a new one tomorrow. So I'm excited about it. If you guys don't know, tomorrow they're doing an Agentic summit online. So definitely register for that on the UiPath website if you haven't yet. I'm going to be watching it, probably tweeting stuff live tomorrow based on what they announce. But this sort of thing is also increasing time to value. Now, it's probably not quite as big as far as like the TAM, because each product is for one specific category, right? As coding agents, increasing time to value of the entire platform. But I think they're releasing like a healthcare specific pre-built thing tomorrow, a package, and this sort of stuff allows these specific companies to see the return on investment really fast. So this sort of stuff is likely going to we're going to be seeing some amount of time to value acceleration like continuously, and then coding agents could be like a huge accelerator, which is why the 9% guide it's kind of just laughable. Like during the live stream, I should have started laughing. But yeah, I guess we'll have to see. We'll have to see. Do you have thoughts on any of the pre-built stuff? I'm not sure if either of you guys have looked into it, or if anyone else, by the way, has any questions listening to this conversation, please request to be speaker. We would love to answer your questions.
Hey, I've got one. Sorry to interrupt you. I've been following you guys for a while. It seems to be like a pretty good value proposition. But what I'm curious about is, what do you guys think of this technologies?
Did he start cutting out for anyone else?
Yeah, it's cutting out for me too. Sorry, having trouble hearing you.
Anybody?
I heard anybody, but that's pretty much it from like the last minute.
Is it? Yeah, I couldn't hear what you asked. Is it the question that you also I think you replied to the space? Is it about Daniel Dine's kind of approach to getting the market excited and stuff? Is that what you're asking about? Or is it something else? I don't know. I couldn't hear your question, but I think he did type a question about Daniel Dine's not maybe being the best person to get the market excited. And honestly, I think that's probably a thought that a lot of people have when they first hear him speak. I'm not gonna lie, I did as well. I think he can sometimes seem a little bit kind of monotone, and some of it's obviously English is not his first language. I think that's part of it. Might be cultural, but to be honest with you, I think that's part of the opportunity if you really just look at the business and the fundamentals. Like, yeah, he's not an Alex Karp in terms of how he juices everyone up, and he's not an Elon Musk in terms of that. But in terms of like his technical engineering leadership, I think he's right there. And what the company's doing, I think is that's what you need to pay attention to. So I view it as an opportunity, and part of the reason why the company is not valued at a high premium is that there is a level of like on the surface lack of excitement that people probably see if you're not really paying close attention. And I think that's definitely there, and I'm not going to deny that. And I think that's not where the market ultimately makes its money. It's like, is the business producing something? Is it generating, cash flow? Is it growing? And I think that's what ultimately is going to matter. So you got to kind of just look past that.
Oh,
Yeah,
let me
I think
push back on that. Daniel Dines maybe himself is not the greatest speaker, or he's not gonna like pump everything. I mean, he's a very conservative guy. But if you look at all the events that he's having UiPath line up, I mean, you got fusion events throughout the year. Their calendar, they got they got an event March 10th, Bucharest, I don't know where that is, London, March 12th, Warsaw, March 19th, Paris, April 1st, Benelux, wherever that is, Stockholm, Washington, D.C., Global Fusion, Las Vegas, Milano, Istanbul, Munchen. I'm sorry for slaughtering all these foreign names. But yeah, I mean, he's got like a band tour lineup here all across the world. So they're definitely putting UiPath out there. And, I've seen some of these events on YouTube, and they're pretty impressive and well done and put together. So I think they're doing a good job advertising Path to the world, even if like from an investor, not a customer perspective. I mean, as investors, we can see these presentations. Even if he's not the most charismatic speaker. So,
yeah, I would just like to add as well how little it matters long term. I was reading the book called Outsiders, which is about 10 outside CEOs that outperformed their industries during their reign as CEO of their respective companies. And one thing that's really interesting is many of them, I think actually most of them, the market didn't like them because they didn't like talking to the market. They didn't like talking to analysts. They liked focusing on their business. And also, many of them did different things than the other companies in their industry. They did not follow the herd oftentimes. And that caused the market not to like them either. So what's really funny is some of these companies traded at a discount to their peers the entire time they outperformed them, which is just so funny that the market would trade like a company at a discount the whole time, that they're just whooping all the competitors because they don't like talking to the analysts, they don't like talking to Wall Street, that they like just focusing on the. I just thought that was so funny that being different. I think it's like such a huge advantage, especially when you're an engineer and just like super into the automation and tech space, like Daniel Dines. It's like I could care less. I mean, obviously, I'm glad that there were a ton of interviews, and I could, even do 400 hours of research into the company when I was first digging into it. That there was that much material on them. I'm grateful for that. But if he doesn't want to do an interview for 3 quarters, and the company starts accelerating revenue growth, people are not going to care anymore that he's not doing the interviews. They're only going to look at that accelerating revenue growth, and the market's going to switch to greed, and the stock price is going to skyrocket. And what was a weakness, people are going to start looking at as a strength. Like if you see Daniel Dines on the Forbes front page or something, they're going to be like eccentric billionaire, richest man from Romania, and it's like going to be this like super mysterious like thing that makes people extra like idolize them like how brilliant they must be, that they can talk so brilliantly and not their first language and stuff. Like it just all flips. Like the numbers are all that matter. That's kind of the final point, the conclusion to it all. The TLDR, the numbers UiPath puts up. That's the bottom line.
And I mean, the substance of what he says is like pretty amazing. I mean, if you go back and look at his vision for the company back in 2024, I mean, he really is a visionary, right? It's just, his delivery is one thing, but that, again, it doesn't really matter. None of that matters.
I would counter the fact that it doesn't matter that it doesn't matter if he speaks or not. Like the role of a CEO is a visionary and to always be selling their company and keeping it at top of people's mind. You look at how Elon is always pushing Tesla, SpaceX, Dario at Anthropic is always pushing it, Laminate Management, like visionary leaders are usually out there pushing, which keeps investors interested, keeps client interested, brings people into their orbit. So I actually do think it might matter more than than you expect or think.
I mean, if you want it to trade at a huge premium in the short term and move completely off of sentiment, then of course it matters. Someone super charismatic is going to have a higher multiple, I think. But it doesn't
Not
mean
just that, super charismatic is going to have startups wanting to adopt their technology. People there are looking to, hey, which company should I use? A founder is always posting content, talking about their business, showing how they're superior. That's going to simply draw more people to their business. Startup and smaller companies are more likely to adopt them, and then over time, they're going to grow faster.
So, I mean, the thesis of the book Jake was talking about is called The Outsiders. And basically, it talks about CEOs that are extremely, I guess, conservative in how they spend money. They want a high ROI. And an example of that in that book in particular is how capital cities, which was so cheap and didn't care about investors at all, that when they were acquiring news stations, which was their industry they were in, they wouldn't even paint the entire building when they needed to repaint it. They would only paint the side facing the road so that advertisers would think, okay, it's a okay building, and they wouldn't paint the backside. And that's how much they didn't want to waste money and have a large ROI on everything. And they ended up being able to acquire. They went from like single news stations to being able to acquire, I believe it was ABC, and Warren Buffett came on, and he was actually a backer with them when they bought ABC, and he called him one of the best capital allocators ever. So,
Absolutely, those are two different things.
yeah,
Being a great capital allocator is crucial.
right.
That is not that is different from whether you're constantly pitching your business and trying to push it forward.
Right. Yeah. So,
But that's a very good
yeah,
point. Capital allocation is, of course, super
yeah,
important.
and the CEO is ultimately the capital allocator in charge of the business. So, maybe you're not acquiring business, but you're deciding how money is being spent in the business. So, I mean, yes, there's salesmanship. Some businesses have different level of salesmanship. Some have different levels of money that they want to raise from the public market. Some don't care to raise money from the public markets. Some like being cheap so they can buy back their stock, and some like being expensive so that they can use their stock to acquire other businesses. So, I think there's benefits to both, but there's not necessarily just the best way to go about it.
Yeah, I definitely understand like what your point is about if you're not super charismatic, maybe you're not exciting the youth and you're not attracting some of the youngest founders. But I think the best founders want to use the best technology. And if you make the best technology, that is going to be what matters most in the end. And maybe Daniel Dinas himself would disagree with me, because I think he said that marketing matters more than product. I don't know, but that goes right along with what you're saying. Don't quote me on that.
On the best product winning, that relies on the buyer having the ability to spend a lot of time to figure out what is the best product. If you don't have a lot of time to spend, you can see what's out there in the news, what you see on social media, extra if you research it quickly, and you're most likely to see founders that are always pushing their businesses.
Yes. So two things. One, the customers that UiPath is focused on, Daniel Dines is talking to them like one-on-one. He's talking to the big Fortune, 100 companies, Fortune 2000 companies. He's talking to the really important customers they're trying to woo personally. So he is doing that. And they have a whole sales team set up that knows how to win those deals, which is a completely different thing than, getting retail or, no touch sales to SMB, to small and mid-sized businesses. But then the second thing I wanted to say regarding attracting those small and mid-sized businesses, and I'm all for having the most charismatic speeches you possibly can, but I also just don't think that's actually what matters, especially when Claude Code is going to be the one doing a lot of the coding, doing a lot of the building. So what that means is if UiPath is one of the best platforms that AI decides to start choosing, which we have to see, to actually build its automations on, if someone prompts it to code an auditable, governable orchestration system, UiPath is making itself appeal to agents first. This is the sort of thing that Daniel Dines is talking about, the world he's living in, when agents are going to be making a lot of these decisions or doing a lot of the building. It's like when I've been vibe coding with Claude, I'm choosing a lot of my structure without even knowing what structure I'm choosing, and then I'm having to pay for subscriptions later because Claude is just building the things that I want it to build. So if someone says, hey, build a governable orchestration system, and Claude starts building within UiPath because all the backend is set up for that, there's so many strategies that can work beyond, just being super articulate. That's all I'm trying to say.
Yeah, absolutely. And don't get me wrong, I'm a path holder myself. I just wish that they were better and more aggressive at going to capturing the startup ecosystem and capturing businesses that are going to dominate the future as their clients versus focusing on the larger ones, which is often how those companies that get disrupted, they focus on their key top clients, and then the ground beneath them slowly gets eroded, which is unfortunate.
Yeah, no, that's the classic innovator's dilemma for sure, because the bigger clients offer you higher profit margins and you just keep going higher and higher up market. So yeah, I definitely want to see code engineering agents and coding agents allow them to, compete even on self-serve. But as far as the next 3 to 5 years go, it doesn't really matter. And then the other thing is, we could see, because okay, I think people underestimate, most companies are not software companies. Like a very, very, very small percentage of global companies are software companies. And a trucking company or a church or a hospital or a cheese manufacturer, it's like they do not have the coding expertise to build their own automations. And even through Claude Code, they do not have the expertise to build auditable automations that are going to work, that they're going to be able to trust. So it's very possible that even the very small startups that are experimenting with stuff now, like most of the AI startups now are software companies, right? So yeah, they're all going to try to build their own thing. But most small companies, they might just get to a size where they need the governance, and UiPath's just the best system. And it's like they're not going to rebuild a whole system from scratch, which is super expensive and requires a ton of expertise. Or Claude needs to be specially trained in how the architecture of a auditable orchestration system needs to be built, because you're not going to just be able to prompt that unless you have that specialized knowledge. A lot of these companies might just switch to UiPath once they get big enough that they're now regulated, or once they get big enough that they now need the governance and the audit trails, or they want the trainability. So even if they're too expensive for small customers, it doesn't have to be the sort of thing where they're actually a worse product and people aren't going to move to them when they need them because they're not the best governed orchestration layer.
Yeah, the idea that everyone's going to wipe code their own software is a little bit ridiculous because, yeah, building version 1 is easy, maintaining it, managing all the edge cases, continuously improving. That takes a lot of effort.
Yeah, I think people are afraid though, because there are a lot of new startups, right? So there's a lot of new competition, and they're looking at the competition and not calculating in that the market size 100x. So 10x more competition is actually, relatively the opportunity is still much bigger, and there's more blue ocean than there was before. Sorry, who was going to go?
Sorry, I was just going to add on earlier when we were talking about kind of. I think when it comes to marketing, this is one area that I really do wish that UiPath was doing more. And I think part of it might just be the current target market that they're going after tends to be very large corporations that they're not winning that business through kind of traditional like consumer media that you would normally see. So we might not get as excited, or everyday people aren't. UiPath isn't becoming a household name because it's really living behind the scenes in the back end of these large corporations. It would be interesting if UiPath launched or kind of started to also focus on, maybe a different part of the market, in addition to what they're currently going after, meaning like maybe it is more the SMB, small and medium-sized businesses. But part of me wonders if they just aren't doing that because now they do just think there's no point in trying to compete with like a Claude in an area that maybe doesn't need like massive orchestration or really high volume. But I think if they did do that, that would probably make them more of that household name. It honestly probably would help their share price in the short term because people would start to get excited and see them as this like, kind of the volume of customers they would have would probably expand. But I don't know if that actually makes sense from a competitive landscape. And Brian, you mentioned like product market fit. There might not be product market fit at that customer segment. And that's part of the reason why I think people might also be like losing excitement is it's kind of boring. Like the customers they're going after and the way they do it, it's not some exciting viral marketing campaign, right? It is different. It's like B2B. I mean, honestly, even like Palantir, it's not like their marketing is overlapping with like consumers, right? Like Palantir, at the end of the day, they're closing these deals kind of, business to business, and it's different. They've gotten more of a momentum, and investors are just looking at their revenue growth, and there's excitement there, but it's not like there's excitement about consumers necessarily like using their products or kind of small businesses. So
I would hope as they release their new agentic builder that Daniel talked about in his recent YouTube video, basically allows someone through a chat interface to build automation, manage them, and run everything similar to how Claude Code runs coding. I would hope that as a part of that release, they start going after SMBs because then it's more of a self-service model where you can go in and you can just through the chat interface build what you want. Whereas currently it's probably requires a lot of UiPath staff to onboard clients, walk them through how to use it, how to build things with it. So hopefully that is a future growth area, which obviously is not priced in now at all.
right. Yeah, honestly, that's something I'm not even factoring in. And that would be awesome if that happens. I think that could be the viral factor that really opens people's eyes. And then honestly, then it is probably more of a competitor to like even an N8N, right? That's not meant for these really highly regulated where audit trails are needed, right? That's UiPath's current bread and butter. But yeah, that would be really interesting if these walls come down and now they're just going after like any orchestrations. I think that would probably need like a big kind of rolling out of the red carpet for something like that, because that's a big shift to add that whole customer segment. That could honestly get people super excited if that were to happen.
Yeah, I think people underestimate, or at least no. I think what people do is they're overestimating the current strategy, and thinking that it's UiPath's long-term strategy. Because the current strategy is definitely, upgrading all of their current large customers. Now people are extending that forward and assuming now we're not in this call, obviously. I think we're brainstorming some really great ideas. But people are assuming that because right now UiPath is not trying to grow total customer count and they're just trying to upgrade big customers, that they've just abandoned the whole bottom of the market and they're only going after big enterprises forever. But that's kind of a silly assumption to make. It makes total business sense if you were Daniel Diaz or you were in the C-suite of UiPath right now. You launch Maestro, which makes your platform an order of magnitude more valuable now because your automations can think. All of a sudden, your automations can reason and can make decisions, which means instead of automating only very small brainless parts of tasks, now you can automate entire workflows, which makes the value proposition insanely better. And you've already built a multi-billion-dollar business only with being able to automate parts of repetitive tasks. That the first thing you're going to do is be like, oh my gosh, we have a 10 times better product. Let's go to all of our big customers and get them to start using it. And that takes time. And I think it could be a multi-year kind of period that we're in now, where UiPath, now I think they said 91% of their customers over 1 million in ARR have now started to use some of their AI products. So they've reached them all now. They're talking to them. They're getting them to start these like embracing these UI products. But what does Daniel Dine say? In almost every customer conversation, they says there's a growing backlog of automation. So it's going to take time. These enterprises, especially these big ones, are very slow. They move like sloths oftentimes. And it's going to take them a while to start embracing this. And like I said, it could be a few year period of time. But do you guys think that like UiPath's just going to stop after all of their big customers are now onboarded and fully utilizing Maestro throughout their business? No, like then they're going to start going after new customers, like more and more. I mean, getting their 100K customers up over 1 million, right, by utilizing more of Maestro. But then eventually they're going to keep going after growth. So right now they're simply going after the easiest short-term place to unlock growth. It's offensive and defensive at the same time, because if their current big customers start using Maestro, the chance of them leaving goes down drastically. And they don't have the resources right now to prioritize their small customers. They said customers over 100K, under 100K in ARR, like 40% or something have started experimenting with AI products. That's it. So UiPath doesn't have the resources. They're not really self-serving it themselves. And that's where we're seeing the churn. But the current moment is a result of the current strategy and the current bottlenecks and the current lack of resources, which is why even though UiPath's like costs have not increased for 3 years, they're still hiring in engineering and sales. They're still hiring forward deployed engineers because there's a real backlog there. And hopefully engineering agents will slow that down. I think they will. But I think it's very reasonable to assume that UiPath is going to do the obvious thing, and once they've really, upgraded the majority of their big clients to really embed Maestro, they're going to go after other big clients and smaller clients as well. It just makes sense. I don't know. Any thoughts on that?
Yeah, I think that it does make sense. I think that would be a game changer for the TAM, right? The TAM's already really big with large enterprises, especially because they are a global company. But yeah, I think if they also start focusing on small and medium sized businesses, that'd be huge. And then you can have more of this. Go to the website, kind of sign up, get your subscription, and start using these agent builders and building these things out. You don't need the technical expertise. And that's the kind of stuff where, yeah, you can have some hockey stick type growth in that pretty quickly, especially when you're starting from small numbers, right? The comps are easy to beat. They can really start to show momentum. I think that could get people excited. I'd love to hear them, tease that. Maybe that's what was kind of implied when he mentioned the agent builders, cutting time from months and weeks to hours. But yeah, I haven't quite like connected all those dots yet. But if they were to say that, that would be huge. And you're right, it does seem obvious that they would do that at some point. But I would love to hear them make an announcement like that. That'd be huge.
Yeah,
Jay,
for
can
sure.
I bring up the ghost of Claude a little?
Sorry, say that again.
Can I
Yeah, go
can
for
I
it.
bring up the ghost of Claude a little? One thing I am concerned is that what people say Path's edge is that they basically have most large companies trusting them. They have enterprise distribution. Claude and Anthropic obviously have a massive enterprise distribution as well. And Claude Code already launches coding sub-agents when needed, which is a part of orchestration, where the main agent orchestrates a few sub-agents, gather the results, test them, and then uses them. It's not a hard stretch to imagine that Claude can build an orchestration layer that involves humans in the loop. I mean, the humans are already in the loop in Claude Code, depending on your settings. And it's not a big leap either that Claude can code its own automations that are deterministic. And people say, Claude is not reliable now, which is true. It's not perfect. It makes mistakes. But if you look at how it has improved incredibly over the last 1 year, I've been using AI coding now for at least a year and a half, and the difference is day and night. So it's hard to imagine that in a year or two that it won't be dramatically better as well. And token costs are falling at an incredible rate. So it's not inconceivable that in 1 to 2 years that their accuracy is so high that only in perhaps healthcare settings for super regulated you would need deterministic. And even in that case, the Claude could simply code up the deterministic one on the fly. So that's one thing that has me concerned, is that the ghost of Claude is real. And that as AI improves, that it could be a serious threat to Path, which is why we're seeing price getting crushed every other day whenever there's Claude news. Now you could say that, hey, they are the neutral layer, so you can switch from OpenAI to Claude to Gemini as you want. But if all the main providers, they all provide their own orchestration that works really well, what is the role for Path?
Yeah, I think the only risk is if Claude were to get really good and then stop releasing their API, which they're never going to do because now way too much of their revenue is through the API. And open source, I think, thankfully, is far too close behind, where they're never going to, make that super brilliant AI agent and then not let anyone use it except for through their platform. If they got a big enough lead, then they could start considering that. That would be a real risk. But as long as UiPath can wield whatever the top intelligence is through an API, I think the smarter AI gets is only a tailwind for UiPath. Go for it, Phantom.
Yeah, I think that is the concern that you brought up is honestly why I think perhaps the small and medium sized businesses UiPath hasn't gone after them yet, is because if there's not as much of a moat, meaning like the barrier to just kind of spin up a more simple workflow orchestration, you can kind of switch to a new provider and there's not a lot of switching costs and headaches. I think, yeah, that's where like there will probably be a lot of competition between Claude, perhaps OpenAI, Gemini. UiPath could play in that space too. But I think the larger companies are probably not going to want to lock in to a specific vendor. Anthropic is currently in the lead, I would say, in terms of, the coding agents for enterprise use, and Claude Code is definitely, I would say at the top of people's minds there. But one, that might not always be the case. And you could have a competitor come in and another LLM really pass them up or be just as good. And then all of a sudden you have, I think like that whole area becomes more commoditized, and it's really not about who's got the best coding agents. It still comes down to the bigger picture, the top layer orchestration. And if that is where Path continues to just specialize, I would just, I think at least for the next few years here, I just don't really see that getting disrupted. But I do see it happening from the bottom up. The most simplistic orchestrations are going to be, like we were just saying, that the reason why UiPath could maybe expand, or why it would be so good for their onboarding customers, is that you could literally just go onto the UiPath website, sign up, and start, agent builder kind of coding up these orchestrations. Well, if you could do that with UiPath, you can definitely do it with Claude. You can definitely do it with some other things too, if they're relatively simple. The way I think about companies using Maestro is literally a top-down approach, where you're kind of viewing these orchestrations across an entire enterprise. That's not how I think people are currently using or even thinking about Claude. They're kind of thinking about it more as, how do I automate what how do I automate like my individual work? And it has computer use now, is kind of what they just launched. So it'll read your screen, it'll kind of go into your files and do things, but it still doesn't seem to be going after like top layer orchestrations, and with everything that comes with that. And I kind of think that's why UiPath has just focused on this area. It does limit the number of customers currently, but that's still a high number of customers, that we're talking big business that have these complex high volume workflows. I just think it's going to be much harder to disrupt that with as long as UiPath keeps gaining share in this area, right? It's like it's going to be a race, probably from the bottom, the most simple workflows, to the most complicated, that will become more or less commoditized. And I just think we're a long ways away before enterprise level, like, spanning across entire enterprises, touching all these different agents, with all these different regulatory requirements and all these complexities. I just feel like we're a while away from that being something that is not niche and is not, doesn't require a lot of expertise that UiPath has.
What do you then think about OpenClaw and OpenClaw, which OpenAI basically absorbed the talent, and Nvidia released Nemo Claw, which adds enterprise-grade security and sort of safety features on top of, which is basically an orchestration framework that's free and open source. You can have chat interface, it can spawn other agents and manage them. What's your thought on that? And that potentially being a Maestro risk, given it's
Well,
open source, NVIDIA is putting its weight behind it, OpenAI absorbed the founder of OpenClaw, and you bet your ass that they're working to incorporate that into their OpenAI ecosystem.
yeah, I mean, if it's free and it's open source, and it's going to be a really strong agent that can go off and kind of do these different things. To be honest with you, that sounds like something that Maestro and they would probably just build into their platform, right? Daniel Dines has said like open source is what they prefer, or I think it was a couple years ago when they were first building out Maestro before they even launched it. Like open source LLMs was where he was focusing because they were cheaper and he didn't have to worry about getting locked into a specific kind of LLM. Right now, obviously, Maestro has both. You can use open source, you can use these paid models, but if you're telling me that like OpenClaw is going to become kind of the commoditized or go-to open source individual agent, I would expect Maestro to just bake that into their platform.
And for OpenClaw, obviously, no enterprise is going to use it because there's no safety features on it. But at GTC, Jensen literally had a large section about Nemo Claw, which is their implementation of OpenClaw, NVIDIA's implementation of OpenClaw, that adds enterprise security. It adds, ability to do local compute to set such that some information is never exposed to the internet. It has the ability to manage what the agent can do, what it cannot do, and the various safety features which enterprise require. And NVIDIA is focusing on this, just like their CUDA AI library. They're focusing on Nemo Claw for the agentic era. And if NVIDIA is working hard on building Nemo Claw, which is a Maestro competitor, and it's free and open source.
Yeah, I'll jump
I
in
think
here.
that's something that market is not thinking about currently. Market is just thinking about Claude.
Yeah, so I think that the very reason that Nvidia is pushing OpenClaw and launching Nemo Claw, and the actual AI labs are excited about OpenClaw, is the very reason that companies are going to choose UiPath Maestro over OpenClaw. And that's the fact that OpenClaw just burns through tokens. There is no reason to have a super expensive smart intelligence, which I talked about a lot earlier on this call, I think before you were here, Magnus. There's no reason to have a super expensive intelligence doing things that a lesser, cheaper intelligence can do. And the cheapest intelligence is RPA, which has the intelligence to repeat the same task over and over again perfectly. So the very reason why NVIDIA wants as many people to use OpenClaw as possible and are creating support with Nemo Claw is because, like Jason Calacanis said in the All In podcast, it started to cost more in tokens per month than an employee costs. So we're talking over 100K in token costs per year running OpenClaw. So if NemoClaw can be a bit more efficient and make sure that it's doing less useless stuff and create some audit trails and stuff, like, yeah, sure, that's going to cause more people to experiment with it. And some companies may use it. Some companies will use it for sure. But like Phantom said, if there's anything it can do that UiPath can't, since it's open source, UiPath can integrate it and UiPath can do everything that it can do. But then second, the fact that you can, for things you need to do over and over again, which there's many things in enterprises that are repeated. That's what a business is. It gets better at doing kind of the same thing every day. You're going to eventually start having the cheapest intelligence that can do every task. So every task is going to eventually sort down to the cheapest intelligence that can do it, which is going to create an even bigger market for robotic process automation than currently exists. And your comment that like an AGI or the ghost of Claude, an artificial superintelligence or something, is just going to be able to do everything and just spin up all the tools. It's like, yeah, that's very possible. But why are you going to create a brand new screwdriver? Like, why would you have Optimus from Tesla build you a brand new screwdriver before it screws in the screw, and also build a new screw as well, when you already have a screwdriver and a screw there? It's like you're just going to tell Optimus, hey, use the screw to use the screwdriver to screw in the screw. You're not going to rebuild the tools from scratch when they already exist. Don't
That's
know.
absolutely true. 100% agree. One thing in OpenClaw is that you can basically have different models for different levels. Of course, you don't want the PhD doing a simple task of ordering food. But in OpenClaw, you can have, Kimmy, Moonshot, Kimmy K 2.5 do cheap task. You can have Opus do complicated task. you can have different agents that are different price level, and you can have cheap agents doing most of the sort of trivial stuff. By the way, I don't mean to sound negative or bearish. I am long path. It's a meaningful holding for me. So, but I am simply evaluating all the possible downsides and constantly evaluating, is my thesis wrong? Am I, my thesis is the era of agentic, and they seem perfectly positioned to profit from it. But so far, the narrative has not caught up. So I'm simply poking hole in my own thesis and speaking to some of the leading voices on it to hear their thoughts on the holes that I'm poking.
Magnus, so a question for you. Where do you see adoption? And in your view, where do you think Maestro is going to be adopted? Which kind of customers? And for your personal bull case, who needs to adopt it in order for your bull case to work out?
I mean, their current, if they just maintain their current business, the stock is relatively cheap. So you don't need a massive adoption for it to work out well. What you need is their cash flows in the, let's say, years 4 to 10 or 4 to 20 to not be decimated by Claude, Nemo, Claude, or other agentic frameworks. So if they continue to grow at their current level, they are priced relatively cheaply, somewhere, PE 15 to 20, price to cash flow even cheaper. So they don't need massive adoption to actually work out decently well. They just need to be not obliterated. Now, if the large clients adopt Maestro, which makes sense that they do, then the revenue growth is going to be meaningfully higher than the market is pricing. The market is pricing extremely low revenue growth and is pricing that revenues probably start collapsing in year 5 to 10, which would explain why the prices dropped so much, because people simply think that Claude will take them out of business. What we need is them to stay in business and continue to grow moderately. And if they do that and don't get obliterated, then they will probably be a good investment. And if the agentic market rises, 10x, 50x, 100x over the next 20 years, and they are able to capitalize on it, it will be wildly profitable. So there's a lot of valuation support if they don't get obliterated, which is why I keep thinking about, okay, can Claude simply take them out of business? Can Nemo Claude, if Nvidia pushes it hard, can it simply take them out of business? If they don't go out of business and they just continue chugging along, they'll be a pretty good investment. Be able to probably buy back 8-10% of the stock every single year. Well, their costs are relatively stable. They're not increasing their operating costs. Their sales and marketing and research has been flat for many years now. And if their revenue keeps coming down, keeps growing, there's going to be huge uplift in earnings per share and profit. And with share count dropping 5 to 10% based on buybacks, their earnings per share is going to go up a lot, which will give a very profitable investment case. So the key point is, are they going to be obliterated by Claude and OpenClaw, Nemo Claw, other agentic frameworks or not? If not, it should be a good return.
Yeah.
How do you feel enterprises today that are the bread and butter of UiPath are toward Claude's current products around orchestration?
I mean, their current clients, enterprises, large enterprises can be so dumb and slow that many of them don't allow outside coding agents and only allow like Microsoft Copilot, which their firm has approved. So it's hard to say with the large, stodgy, slow enterprises. But if they already have using Path, it seems like the direction of least resistance is just continuing with Path. No one's going to fire you if you were using Path, and now you just add Maestro. But someone might fire you if you use Claude and something goes wrong or your data leaks. So the path of least resistance is probably to continue with them.
Yeah. I was just going to say, with a 97% gross retention rate and the fact that they've got 90% of their $1 million or more ARR customers now using an AI product of theirs. Granted, it's probably in early stages and not generating tons of revenue yet. That's a good sign to me that adoption in their existing customers are doing well. what I think Path needs to do in order to kind of like in order for my base case to come true is they just need to be the enterprise agentic orchestration layer. Like they need to be one of the main players. We talked about them potentially playing further down into the smaller businesses segments. That doesn't seem to be where they're focusing because I think there is a lot of competition there that can be disrupted relatively quickly just with how the technology is progressing. I think they need to stay these really complex high volume workflows. They need to be the go-to for those orchestrations. If that becomes, if we see like Claude eating into a lot of that market, that's going to be a red flag for me. I haven't seen that yet. And I think right now, as Claude is kind of focusing more on those smaller, more like individual focused workflows and even consumer, workflows, that this is the time for Path to just go full pedal to the metal on large enterprises, complex workflows, and build out that moat. And their partnership with Deloitte recently to be like their agentic ERP, the technology behind that. Deloitte is going to be, signing up customers and building out these agentic ERP solutions using Maestro. That shows where their head's at. I mean, they know that their target market are the biggest companies in the world and they're global, and they just need to keep, I would say that's what I need to see as a base case. If they want to expand further down and maybe that becomes a bigger market for them, they can do it and it'd be exciting. And honestly, it'd probably help the share price in the short term, but that is where they're going to be going head to head with like all of these other solutions that are going to be coming up. So that's probably why they're not focusing there.
You hit the nail on the head there. Well, thing is, their current cash flows and their next few years' cash flows are very secure and safe. But the market is likely pricing that the cash flows in year 5 to 15 are, at risk. And they're focused on large enterprise and not focused on up and coming companies, which will likely disrupt many of the larger enterprises, exactly puts cash flows in years 10 to 15 or 5 to 15 at a higher risk. So they're currently playing a go-to-market strategy, which makes it them more vulnerable to disruption, which is what scares me.
Yeah, in the longer term, I would agree. Honestly, I think this is in my view, like we have to wait and see what happens, right? I mean, who knows? But I think over the next 12 to 18 months, if they beat their guidance, which I think they're pretty well set up to do that, and raise guidance, or at least continue to beat guidance to get us to next year, and then maybe set more aggressive guidance. I mean, the stock is gonna go up. At that point, as investors, you have to make your decision. Is that enough of a return? Are you happy with it? Is the risk getting higher or lower, right? As you look out further into the future, and I'll reassess then. I mean, I'm not saying I'm going to hold Path forever. I think there will become a time when I'll be happy with hopefully my return, and I'll exit. But at this point, I look at where they're at and what's on the horizon, and all you need is one really just kind of bullish quarter, or just really just outperform, and it seems pretty easy to do where they're at. That I just feel like it's a good time. It's a good time to be in. It's my view.
Yeah, I think the chance that they actually get disrupted is quite small when they're embracing and building all of the new tools that people are afraid are going to disrupt them. Like if you think about the innovator's dilemma, and when it actually hurts companies, you can look at the example of the still mills, and the big still mills had these huge industrial things that are so expensive to build, and these small mini mills were invented that could do the work, but it was like quite low quality. So it could only deal with like the very smallest, bottom end of the market, the sort of metal that like, people don't actually see, that maybe goes in between sheetrock or something like that. And none of the big steel companies actually created their own mini mills, and they decided not to compete against the mini mills at all. They're like, no, the current way that we're doing what we're doing, we're gonna keep doing that. It's way higher quality, and they just started ignoring the bottom part of the market, which increased their profitability and made everyone happy. But then eventually, the mini mills, after there were enough mini mills, they're like, okay, well, all of our profit is gone. We need to go up market, right? So then they go to the next higher tier of metal. And the big mill companies were like, okay, well, let's not compete there anymore, and they just go higher up, and they never actually created their own mini mills. Well, UiPath isn't doing this. UiPath is creating their own mini mills. UiPath is embracing the agentic orchestration. It would be like if they were like, well, AI is always going to be more expensive than RPA, so we're just going to keep doing our RPA, and big companies need the reliability of RPA, and they're like, we're going to ignore AI. It's like that would be the story of disruptive innovation, of the innovator's dilemma, where you just keep using your own technology instead of embracing the new technology. It's like, no, UiPath is like, oh wow, mini mills are very powerful. Let's try and create the best mini mill that we possibly can to make sure that we can compete. So that's why they're making their platform coding agent first, so that Claude Code can build your whole orchestration within UiPath, and you don't need an engineer there holding your hand anymore. That's why they built Maestro for agentic orchestration, because they're like, wow, agents are really powerful. We need to make sure that we have the best AI tools, the best AI harnesses. So they're not repeating the pattern of companies that fell to the innovator's dilemma in the past. And as long as they have technology as good as the newest things in the market, it's like, yes, there's going to be more competition, but there's no reason to leave UiPath. And then I think the other thing people are underestimating is like, yes, the competition did get 10x more fierce because AI is making automation much easier. So far more people are interested in it. It's not like the small, set of competitors that UiPath had before. But the market size, I think, is growing 10 times or 100 times more than the number of competitors is growing, if that makes sense. So there's actually more blue ocean. I said this earlier as well. There's now more blue ocean, despite more competitors, than there was previously, because the size of AI automation is going to be so many orders of magnitude bigger than the size of just robotic process automation. We had a few new people. CRE requested to be a speaker, and someone else as well. Did you have a question or a comment?
Yeah. Hey, I just wanted to share my thoughts. So I've owned Path for the last 3 years, I think. So I've been doing a lot of research and watched all of the stuff that you post in this group, and I'm just gonna share the way I think about this. And if you guys have any thoughts or think I'm wrong, feel free to correct me. So the way I think Path approaches this is they sit in the back office processes of the business. So that's why they focus on big enterprises, because those are the companies, they have to be of large size to need automation for the back office process. Because, for example, Walmart, probably 80% of their employees, they're not front office people. They're 80% of employees are in the back office. So there's a lot of business to be done at bigger companies, as opposed to smaller or mid-sized businesses. They don't need as much automation in the back office. They just don't have enough employees or business. So I think that's why they focus on large clients. And I think that they're just waiting for all of these agents to get deployed at these enterprises before they can start their orchestration layer. Because even like Daniel Dines, during his recent YouTube interview, he said that the uncertainty is at all-time high, and they're ready to pivot at any day. So which means I think they're waiting to see how these models get adopted first. That's why they're generating all the revenue, and then UiPath can start automating and orchestrating all of these agents. So that's kind of what I think. Feel free, to guys, to jump in.
Magnus, I thought you on mute for a second. You had any thoughts on that?
Oh, I was gonna just add to what you said previously, Jake. I think you're spot on. They are doing the right thing. They're pivoting their focus towards Maestro, and Agentic is absolutely the correct thing. They're positioning correctly. The only question remains, can they execute? They're doing all the right things. The only thing that remains is, can they execute and get sales and get adoption? They're positioned well. Can they deliver? That's the only remaining question.
I also have another kind of thought about future growth, and this might be really out of the box, but okay, what are you guys' thoughts on? There's going to be a lot more humanoid robots, physical robots in the world, probably by the end of the decade. I haven't been really following closely, like the timelines on when Figure and Optimus is planning on, I guess, having a lot of these out there in the workforce, but I'm assuming it's going to be relatively soon. Do you think there's overlap with orchestration when you kind of loop in, like you have an organization that has software automation, right? I think with like macro hard, Elon has talked about essentially macro hard and their computer vision being a software version of Optimus, right? So what about when we start to have all these physical robots? Do you think there will be an opportunity, or like UiPath will try to get into orchestrating or kind of weaving in the guardrails for these robots into a large enterprise?
Yeah, I mean, I think that's definitely possible. There's so much opportunity ahead if people stop being in fear mind and start being in opportunity mind or optimism mind. Now, I think that probably physical humanoids being really pervasive throughout society is at least five plus years away. I don't think it's like a super near term thing. But Daniel Dines has actually talked about this before in previous interviews. He's been asked about this. He says customers have asked him if they could orchestrate physical robots. And he said yes, definitely, but there's still too much opportunity in digital for us to worry about physical yet. So this is the other thing people don't realize. It's like the economy is so big. If you have an innovative, strong engineering team and a great founder, and they have a hard time growing in their current space, it's like they're going to keep pivoting until they find something that works and they start growing again. It's like you're betting on a team. You're not betting on like the current present technology as it exists alone. Now that's important. It's important to know what they've built prior, so you know their track record. But I mean, UiPath itself is a result of a pivot that happened 10 years after the company started. And they were having a really hard time, and Daniel Hines never gave up. And as soon as he found product market fit, he scaled it as hard as he could. So I think we're going to see a similar thing. As soon as time to value gets good enough, we're going to see this scale as hard as it possibly can be, Maestro. And I think we're going to see growth rates that people are not expecting still, even though in the short term they've disappointed us with guide. But after that opportunity is fulfilled to its greatest extent, or maybe UiPath just has so much free cash flow coming in, they just don't know what to do, and they just hire a new team to work on this. Yeah, maybe they start working on physical robot orchestration, because this is going to be something that has to happen. You're going to need to orchestrate your physical robots the same way that you orchestrate your digital robots and AI agents, for sure.
It sounds like a big growth market, but I'm not sure they might get it because drone producers are already doing this through swarming technology. Like the Pentagon has $100 million contract on turning voice commands from commanders into drones acting cohesively and taking orders. So a lot of defense tech and drone and robotics companies are working on this. But could be an interesting if Path could be a neutral layer that manages across many platforms.
Yeah.
Yeah, they have less of a right to win this for sure, compared to digital orchestration. But the market seems to think they don't even have a right to win digital orchestration. So we'll see. Phantom, did you have something you wanted to say? Or CRE, apologies if we didn't give you the feedback you were looking for. If you wanted to summarize your point, just like in a quick sentence or two, I could give feedback on it. But you said you've been holding it for a while. Has it been hard? What price did you buy at?
So my average is just above 12. So I managed somehow to average down to a pretty decent price. Yeah, I've been holding it for a long time, I think 2-3 years probably. So it was tempting to sell when it popped on the news with all those partnership with Nvidia when it reached 18. But I, held through it. Turned out not work out too well in the short term. So we'll see what happens. So my point was, I guess, the way I think about it, that they're waiting for all of these agents, OpenAI, Claude, to get deployed on the enterprise level, and then UiPath orchestration services are going to be in demand. Because I feel like until then, it's hard for them to, upsell their services until everyone starts using these agents. So I feel like all of these news that Claude's coming out with these features, that's, if everything goes well, that should create more demand for UiPath.
Yeah, I actually kind of like the way you're thinking about it, because it's counterintuitive in that most people hear, "Oh, new agent, more competition, bad for Path." But as a long-term holder, you're hearing new agent, more need for agent orchestration, good for Path, which
Yeah.
I actually think is the correct way to think about it.
Yeah.
I feel like that's the only way to think about it. That's the only bullish,
I I do
thing I see.
think though, waiting is maybe not the word I would use. I think they're trying to position themselves so that Maestro is already there as that orchestration layer. Um,
Correct.
so that you're right, like agentic adoption is just starting to pick up. And I think they want Maestro to be that orchestration layer that companies are like, oh yeah, this is how we're going to deploy them. Um, and then as more of those agents come out, like you said, there'll be more demand for it. But I don't think they're like sitting back and saying like we need to wait for a better time to strike. I mean, I think they know this is the time to get companies aware of Maestro and what it can do, kind of lay that groundwork, and then and now they have these new agent builders that are going to come out. That way, these businesses are just they're not building them in a silo. They're not building them off in some other native platform to where the agents are from. If they're like a third party agent, they're building and deploying them in Maestro.
Yeah, definitely. And just another point, I work for a publicly traded company. I try to download Claude into my work computer and it was banned. So, I guess that goes to show that companies don't just blindly accept all of these models and, let their employees use freely.
Yeah, it's a really good point. These big companies are not going to be adopting these technologies that are viewed as risky. They're going to go through a trusted partner like UiPath. Yeah, I think the market is just like very wrong about this story. Okay, my battery is about 12%, so I think we have probably like 10-15 minutes left, and then the space is going to die. Does anyone else have any pressing questions or comments or thoughts that they want to share in the last 10 minutes of this space? Brian, I'm curious. Has this conversation changed your perspective about UiPath or made you curious about buying it at all, or why not? He might not be here.
Yeah, I was going to say I think we might have lost him. I also need to probably wrap up here in just a couple minutes, but I appreciate you putting this space on, and it's been good to have the conversation. I've obviously follow you, and Magnus, I follow you too, and seen your posts, and Brian, you too. So really good to have this conversation. Hopefully it helped others too.
Yeah, super appreciated. This was great. Thank you.
Yeah, thank you all for being here and joining. And I'll probably post this up on YouTube as well. So yeah, feel free to listen to the replay if anyone joined late here on X or maybe in the next week on YouTube. So thanks everyone for joining and for sharing your thoughts. I appreciated it a ton, and I hope everyone has a great rest of your week.